Hi, I'm Jim Cramer talking to our energy expert Dan Dicker. Dan, there's tremendous destruction going on both in the MLP sector and also in the E&P. I know you've been very negative, so I'm wondering whether things are changing. I also understand that there's a couple of high yield funds, one in particular that's being shot against that has a lot of MLPs and they're trying to break the fund. Have either of these groups reached levels where I know you, again, you've been negative, they're getting interesting?
I think finally we're getting there.
Really? Because you have been negative and right.
Yes, and I've told people to keep their powder dry, and I think we're now at probably close to a 1-year anniversary of the bust cycle. Well, I think it goes on for a little while. I think what is needed, and I've always said it's needed, is this kind of consolidation wave that
which really hasn't happened.
Has started to happen in the pipeline.
Mark West.
Exactly.
Right.
Mark West, the Harold Hamm
right.
buying, the Williams bid, which they didn't take. By the way, Williams is back down to 54 after a $64 bid.
Isn't that crazy?
That's something at $50, that's something you can put in your back pocket and leave, no problem.
Right.
I mean, that's one of those things. But there are now we've got E&Ps that have gotten hammered so hard that they're at levels that interests an Exxon Mobil, who has already said they really have cash in the pocket.
Right.
They're looking to buy production as opposed
to a Cimarex, a Pioneer, an EOG.
I'd look at many of those. Pioneer for sure.
EOG is down
Continental in the mid-30s.
I know, kind of the mid. That is incredible.
EOG, if it comes down
EOG
to
was at 97, then Einhorn famously blasted, dead right, stock 77, still under tremendous liquidation as oil breaks through 50.
Think about it, Jim. If you can buy, if Exxon bids on EOG with a 20 or 22% premium at $74, $75, they're getting it at 90.
Yeah,
that's a monster buy. That's the big move. That Hess is another one, I think.
Just crushed it.
But it's a fantastic asset holder in the bucket, and it's the exact kind of well-run, quality asset company with good debt, as opposed to some of the others that have very weak debt positions that an Exxon will look at.
But Dan, oil breaking
Chesapeake,
50.
$9.
No, I mean the preferred there seems to be still money good.
I agree.
With oil breaking 50, next step 40.
I don't think we will find new lows. This is where I've always said, look, we've got a W recovery here. We will get back down to the lows we saw in the early spring. I think that that's a possibility. I've always said we're going to have a W recovery. This is the second leg down. This is the one you have to watch. Watch where oil goes. I don't think it breaks the lows again. It will get down to the mid-40s.
Even though a lot of the oil stocks have broken the lows.
That's correct, and that's really kind of the half-tell that you need. Now that you have stocks that are in the zone, where a lot of the majors and a lot of the private equity firms, which have generated billions of dollars in capital, will start to spend it at good value, oil will find its level, its last level. This is the time, and I'm talking over the next several months, not immediately. You have to start looking for these deals to start happening. When they start happening, that's the time.
This is a very big call. Again, I want to make everybody clear. Dan was right to stay away from the group. The group has had a monster, relentless decline, and it seems like now is the time to start.
Wait for the buyout avalanche to start. When you see the first one or two of these, time to get in big.
Very big call. Thank you so much, Dan Dicker.